All right, hello, and welcome to Camel Finance. I'm your boy Camel, and things are getting very, very interesting. We had the CPI print as of yesterday. CPI has come in not quite as cold as I would like, but still cold. We are in the case where we've taken the 50 basis point rate hike off the table now, and a pause may even be in sight. But first, some news. Here's Vitalik. He has been spotted on apparently what looks to be a date. So maybe, just maybe, she saw that proof of snake. In all seriousness, like global clothing brand Guess now accepts Bitcoin payments in Switzerland. At the bottom here, we've got GBTC, the Grayscale Bitcoin Trust, and at the top overlaid is Bitcoin's price action. Once we made this cycle low, I was pointing at this divergence. I was saying here, you can see GBTC is rallying exactly as I expected Bitcoin's price to do out of that cycle low. But at the same time, Bitcoin's price was nosediving. It was pulling back. And I was saying this price action, this divergence, won't last very long, and that usually where GBTC goes, Bitcoin goes, and of course that has turned out to resolve to the upside. So the big question now is, can we close above this big significant level right here? But one thing I know for sure is watching Bitcoin absolutely send during a banking crisis after regulators tried to cut it off the industry has to be one of the most satisfying moments ever, and I tend to agree with this. The Bitcoin market cap actually just passed 500 billion. So 199 trillion, 500 billion left to go. There are still many people out there waiting for 12K. And when you look at this chart, really, really, really hard for me to say that 12K seems likely at this moment in time. Now things can change and they can change quickly, but they haven't changed yet. So here's yesterday's CPI data. You can see the US CPI came in at 6%, which is right on forecast and below the prior months, which is the key part. Also, month over month was in line with forecast and below the prior readout. So overall, things don't look too bad for the inflation front. Inflation seems to be coming off. And as you can see here, we are sat around 75% chance of a 25 basis point hike and a 25% chance-ish of a pause at the FOMC meeting next week. Now, I just want to pause here and say, check out this melt-up chart. This melt-up chart is absolutely fighting for its life at the moment. This could well turn out to be a bear trap, or this could turn out to be breakdown retest looking for that resumption lower, which would completely invalidate it. But as long as we can continue to hold above these, and particularly above the October lows, there's still a chance here. And I have to wonder, even though it looked until the last couple of days, even though it looked like we were not going to get that pause, I wonder if that was the last 25 basis point hike. And if, and it is a big if, but if they do pause next week at FOMC, then I expect to see absolutely massive upside for the equity markets. So as it stands right now, we need to get above this downward sloping purple trend line here for me to continue to entertain the melt up. Until that point, then I have scratched this one off, but it's not completely gone out of the question yet. It would need to take out these lows back here for me to say there's no chance of this happening whatsoever. But like I said, get a pause next week and we could certainly see everyone get caught offside here. So the Fed is running out of options. The financial crisis is on the one hand, where sticky inflation is on the other. Which one is it going to be? Inflation is still, of course, at 6%. And let's be honest, in the real world, it's at least double that. But it is coming off, and there's no denying that. Meanwhile, here's the regional banking, and that is absolutely diving off a cliff. Raoul Paul comes in here with just a reminder. He says this was speculative positioning in the 2-year notes going into today, the shortest by the biggest margin in history of the bond markets. Open interest adjusted too. The squeeze is going to be gigantic, and this was just the start, especially as the Fed will have to change course. So Raoul Paul here calling for a change in course from the Fed as well. And that reminded me, do you remember this chart? If you've been on this channel for a long time, then you'll probably likely remember this chart. In orange here, we got the Fed funds rate, and in green, we got the 2-year yield for the US government bond. Every one of these blue vertical lines denotes that when the Fed funds rate moves above the US 2-year yield in green, what you see is the Fed swiftly move to a pause before cutting rates, swiftly move to a pause before cutting rates, swiftly move to a pause before cutting rates. And we're right in that scenario again. So is this something we can expect? Can we expect this pause to show up as the bond market is hinting that we will? And if it does, of course, you will be surprised how quickly market sentiment can change. Now, again, I'm not really saying this will happen. I'm saying we need to get through next week and see. But it is indeed true that market sentiment can shift on a dime. Just look at the shift from a few days ago to today with Bitcoin, for example. So regardless of what the Fed does at the next FOMC, we know that QE is back. Quantitative easing is re-accelerating as the Bank of Japan revealed on Monday evening that it stepped in to the Tokyo equity market for the first time since December 2022 buying 5.2 billion worth of exchange traded funds. Remember, where one of these countries, nations or governments or central banks move, the others soon follow. QE is back in Japan, printer is coming and will soon be back all over the world, and that includes the USA. So we're going to start off with the S&P here. Take a look at the S&P, right? So the S&P, what is it really doing? It's fighting for its life with the blue bear market resistance line from 2022. So can we get back inside here? Can we waddle around? Can we break out? Or have we got to, like I've been saying, get some kind of rejection here that rolls over and make one further low into that daily cycle low before we can go? The NASDAQ, as you can see, perfect touch of resistance again, but until we can get above that, hard for me to be excited. The same is true with the Russell 2K, as you can see here. Until we get above this blue resistance line, it's hard for me to be excited. The Dow, I don't really see much trade set up here. You could maybe argue when we get back above here, then I can look to entertain longs for the Dow. But for now, I'm just interested to see if it can hold the bear market resistance line. My VIX hedge has been stopped out now. I took some off at 28, and now this has been stopped out after today. So happy days there, no problem with that. That is more than paid for the risk. So we'll see what's going to happen over the next few days and weeks with the VIX. Bitcoin working on a nasty wick here. Really, really nasty looking wick. So I guess what we're going to see here is some kind of battle around this yellow line. So we've wicked it for now, a little pullback. Are we then going to come back up and close above this? That's really what you want to see for the bullish case. If we end up sort of chopping around underneath this, then we can say with high likelihood that we are going to dip down into that cycle low before we can go again. This is obviously a massive range using these highs here and these highs here. So looking to get a range breakout, back test and go, and then we can drop down into that cycle low ready at the end of April before then resuming higher. So something like that is what I'm looking out for. If we can get a close above here and potentially some back tests in the crypto related equities. So right now we've certainly got breakout. Can we close above here? Can we retest and resume? That could be a long for sure for Coinbase. If so, are we looking to add MicroStrategy? Looks like we got that breakout retest all in one day. So can we resume off tomorrow? If so, that can be a long. Riot gapping up. Are we going to have to buy this, or can we get some kind of throwback before we go? That of course remains to be seen. And here's Marathon, so breakout retest, looking for that resumption higher. Can we get it again? If we can close above these levels today and come back up above this yellow resistance line here, if we can close above this level, then I think we can see really good things for Bitcoin and for the crypto related equities over the coming days and weeks. So that's the analysis. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already, turn the notifications on if you want to continue to get updates on all these markets in real time as a pro swing trader. As I keep saying, don't go too gung-ho on a CPI print. There could still be a lot of traps. There could still be a lot of volatility. And until we get through FOMC next week, then the price action is somewhat to be determined and somewhat meaningless. In the meantime, there's going to be a lot of chop. And we have not yet, in my opinion, at least for me, earned the right to get back to full exposure yet. So the market's got a lot of work to do. It's got a lot of proving itself to do. I hope you're doing well in life. In the meantime, take care from me. All the best. Cheers. Bye.
And Connor! Look out! Look out! My goodness! Now he's got the back! He's down! Connor just slices through him like butter. Look out! Oh! Uppercut! Wow! What did we say before this fight? We had never seen... Oh! Oh, no! What's the retail on one of those?
And now he jumps the fence.
No.
And he's going right at Dylan Dennis. Mayhem.
Oh, no. Here. You cost off to the title, you bastard. Get in there fighting. You want to, you screwed him out of the title. Don't worry, he's going to get